Hello guys, this is the first outlook video I'll be making for the year. Happy New Year. I hope you enjoyed your holiday and ready to resume back to active trading. Okay, for me, I am not ready yet. I'm not ready to resume to trading yet, but I'm going to start providing my daily analysis, just to get back in sync with the market. Okay. Maybe I might create a paper trading account, a demo account to execute, but I will not be trading any live fund until next month, until second week of next month. Okay. Um, so let's get into the chart. Um, this is DXY. As usual, let's start from the weekly time frame. This chart is looking quite dirty. Okay, so we have this weekly fair value gap right there. Okay, price has traded. This is a level that I've been calling your attention to since price was trading somewhere around here. Okay, I've been calling for this level on the Telegram channel for a long time now. So it's great to finally see price drive into the weekly fair value gap. Okay. So as I have also mentioned previously, I think that there is a high probability that DXY will bottom around this level to resume its uptrend. Okay, because when you go to the monthly time frame, all of this is basically just a retracement. Okay, in my opinion, I think this is just a retracement to continue to the upside to take out these levels. Okay, so if we go to the monthly time frame, let me just show you. On the monthly time frame, this guy right here is a bullish order block. Okay, so this is the body of the bullish order block. This is a midline. Okay, so draw out in time the body and the middle of the order block. Okay, those are very important levels that ideally you would want to see a bounce from. Okay, and this Monday's range, this candle right here, this candle is a very important candle. Okay, so very important candle from an algorithmic point of view. If the market should continue downward and closes below the low of this candle, that is not good. That is an indication that it is going to continue downward. Okay, at the very least to fill this void and this, but I don't expect that to happen. I expect this bullish order block to hold price. So I expect a reversal around this level to continue to the upside, fill out this imbalance here, and also take out this high. Okay, that's my expectation on the monthly time frame. So on the weekly, price has already traded into the fair value gap. You can see it has already feel like half of it, like consequence encroachment on the weekly fair value gap. Okay, and on the daily, we have um institutional order flow entry due. Okay, so I don't know if we are going to get a complete fill. I don't know if price is likely going to drop down again to completely fill the fair value gap. It may not. Okay, it may not. Okay. Today's price action should tell us exactly what is likely going to happen if gets a fill or just bounce from here to continue to the upside. Okay. Let's go to the 1 hour time frame. Let's go to the daily again. I think there are important levels I need to show you on the daily. So on the daily time frame, we have these levels, they are very important levels. These 0.5 levels, they are algorithmic levels. Okay, these are levels that the algo would want to respect. Okay, so they are time based levels. Okay, there are time-based levels that I've outlined on my chart. I'm just going to make an extensive video explaining this. Okay. So if price should come up and there is an alignment of price with time, then this area can provide a retracement or a reversal to the downside. Okay, most likely a retracement. Okay. So this is the daily fair value gap from this line to this line. That's the daily fair value gap. This is weekly. You know, price has traded into consequent encroachment of the weekly fair value gap, and on the daily we have institutional order flow entry drill. Okay, so we've seen a slight tap into it and it seems like we have a reaction from it. Okay, so if the market is going to drop back down to fill this, then we want to see a rejection from this 0.5 level. We would want to see a close above here. If the candle should close above this candle, then there is a 80% probability that it is not going to completely fill it, that we're going to continue to the upside. Okay, so my expectation is that we find a bottom somewhere around here. Now Monday's low can be taken. Okay, Monday's low can be taken, especially since we have this drop down first. So we might see Wednesday, Tuesday or Wednesday take out this Monday's low. Okay, whether that is going to happen by the end of today, we should have an idea of that. Okay, but basically, this level is an area that I'm marking for a long-term reversal. Okay, and why is that? Look at this. Look at this low right here. Look at this low. Look at this low. Okay, and look at this low in here as well, in between these levels. Okay, this low, when price traded down, this low, whatever low that forms there, should become a long-term low. Okay, because we already have an intermediate term low right here. An intermediate term low is a low that has a short-term low to the left and right of it. So this low right here is an intermediate term low. Okay, so once price trades below an intermediate term low, naturally you would expect that that low is going to be a long-term low. Okay, so if we have form a swing high, I mean swing low somewhere here, then I know that that will be a long-term reversal, and I will look for shorts on EU and GU, and I'm going to hold on to it till whenever and keep adding to it. Okay, so if price is going to drop back down to fill this fair value gap, this level should provide resistance. Okay, price should not close above this level yet. Okay, if we get a close above here, there is a 80% probability that price will not come back down to fill the rest of the weekly fair value gap. Okay, so if we go to the 1 hour time frame, it becomes a bit clearer. Okay, we have, ideally I would want to say rejection from this level. I want to see price reject now to fill this fair value gap before it then continues to the upside. Okay, if it squeezes to this level, then I would also want to say rejection at this level as well to fill this and then resume to the upside. Okay, so after this fair value gap is filled, and the algo trades away from it, telling us that it doesn't want to fill it, completely fill it. Okay, especially when price closes above Monday's high. Okay, once price trades above Monday high, the probability that it's going to trade back down below Monday's low is very low. Okay, it can happen, but it is very low. Okay, so this would be the next draw liquidity. The daily fair value gap is the next draw liquidity once we form a bottom around here. Okay, so like I've always been saying, we are looking for one short, one kill setup. Once Monday's low forms, you want to see Tuesday or Wednesday take out Monday's low for the low of the week, and then you have the reversal. So this week is likely going to be a big range week because we have CPI. So it is not out of place to see price find a bottom here and then drive higher to this daily fair value gap. Okay, so that's my expectation. And if we get a close below these levels, below this low that formed on Monday, if we get a daily close below it, that would be an indication that the algo wants to drive price to the downside, or the algo wants to enter into a seek and destroy environment. Okay, I'm still going to make videos to explain all of these algorithmic principles, all of these levels, why they're important, and how to use them for your trades. Okay, but for now, just see them as levels that the algo is likely going to respect. Look at this line here. See how it perfectly aligns with the um, equilibrium of this other block. Okay, look at this bearish breaker as well. This is a high, this is a low, this is a higher high. See how it also aligns with that level. Okay, see how everything aligns. Okay, so that's my expectation for DXY. So I'm looking at something like this. If we would get a complete fill, something like this, maybe a retracement here, perhaps another retracement here, and then to attack that high and potentially the fair value gap. Okay, so that's my expectation for the dollar. I feel like we should get a reversal here, and the reversal might have already happened. Okay, this might already be the low of the week. Okay, but let's see. So by the end of today, we should have a really strong idea of what is likely going to happen. Okay, so it might not completely fill it. Okay, it might not. Okay, it might just once it closes above this level, I would assume that it is not going to fill it. Okay, so that's just what I'm going to be watching for. Let me go to the lower time frame to see what is actually going on currently. Okay, this is still looking bearish. Now, don't these red candles, these red lines are basically my TR candle. Okay, it's an indicator that I created to map out important levels based on time that the algo is likely going to respect. Ideally, I wouldn't want to see a close above this high. Okay, I would like to say rejection from here. If it closes above it, what remains is that the market is likely going to enter into a seek and destroy environment. Okay, so if it closes above this level, there is a 80% probability that it is going to come back down to take out this low and potentially these levels. Okay, but ideally, if we reject from here without closing above it, it can weaken, but if it doesn't close above this level, okay, and reject, then that would tell me that it is going to come back for this level and potentially fill this relative, take out this relative equal lows and fill this weekly fair value gap before it then continues to the upside. Okay, so let's see. Let's see. If it closes above here, then um that would indicate that the market is going to enter, we are going to have range expansion. Okay, if it closes above it, that means we are going to have range expansion. Okay, something like that. Okay, so if it takes out that level, that means we will most likely have something like more like a seek and destroy environment. Take out, closes above here, drops down, um, maybe rally up again, take out this level, then go back up again to take out buy side. Something like a second trend environment. So I wouldn't want to see it, but I see reject from here and then resume to the downside to take out this relatively poor lows first and foremost, and potentially find a bottom here. So I don't know yet if this low is going to be taken, but I would like to see it get taken. Okay. Whatever happens here would give a strong indication as to what price is likely going to do. Okay, if you get a close above here or a rejection, if you get a rejection without closing above this level, then that is a strong indication that this is going to be taken. But if it closes above this level, um, it's become less certain. Okay, the market is just going to be taking out buy side, sell side, and be expanding. Okay, it's going to be expanding like a trumpet. Okay, just range expansion, something like that. All right. So this level, this shaded box is like the TR candle I am making reference to on the 1 hour. It's like my 1 hour TR candle. Okay, so the TR candle are the red candles, but this shaded region is like the TR candle works on the 5 minutes and 1 minute time frame. Okay, but this shaded level is like the 1 hour TR candle. Just see it that way. Okay. This is also a concept that um, there is someone on YouTube that teaches something about ranges, what's the name? DRIDR, something like that. This is an indicator that he created that shows the DR and IDR levels. Okay, so basically the DR levels from my own interpretation is like my TR candle on the 5 minute time frame. Okay. So I'm still gonna make videos to really explain this in details. Okay, it might look confusing for now, but trust me, eventually I'm gonna explain this. Okay, yeah, I like the fact that we are rejecting here now. This setup is a very profitable setup. Okay, that can allow you to use ultra tight stop loss. Okay, so if assume I'm trading this live and I see price coming up to this level, I would go short and use a very tight ultra slim stop loss because this is a TR candle. Ideally, once price trades below a TR candle, it shouldn't close above it. Okay, that is the general principle of the TR candle. Okay, look at this TR candle here as well. See how price really tried to go above it, there was no close. It can weaken, but it should not close above it. So you can actually also use the TR candle as entries. Okay, but there are other things to know about it. Okay, you can see this level, this TR candle here as well. Once price trades below it, it should not go back above it. Okay, look at this TR candle here as well. Once price trades below and closes below it, it should not go back above it. Okay, you can see price came back, rejected, came back to it here, rejected, came back again, rejected. Okay, look at this TR candle here as well. We should not get a close below it. Once price has closed above it, there shouldn't be a close below it until the algo has reached for whatever level it wants to reach for. So this is another one here. Okay, this is another one here. Now, when price closes above it and closes below it, that is generally an indication that the market is going to enter into range expansion. So based on what has happened here now, I can say that we are likely going to, yeah, I can say that we're likely going to come back down to this level. Okay, based on this signature here. Okay, that is an algorithmic signature. When you have the TR candle inside of each other like this. You have a small TR candle, a bigger TR candle. We have a close above, a close below. It indicates that there's going to be a range expansion to the upside or to the downside. Okay, so we've seen to the upside, so we should get a downside expansion to this level. That is what I would be anticipating. That is my expectation. So that's that for DXY. This is the level. This fair value gap is like the main level, the important level. Okay, so we might get a one short, one Q setup. Okay, so I love this. So the price should not close above this. You can see how it's rejected without closing above it. Okay, so let's go to Euro USD. Um, this is a level. This is a no trespass level. This yellow line. Okay, the market should not close above it. If it closes above it, then that would indicate that it wants to reach for these relative equal highs. Okay, so and I don't want to see that. I don't want to see price come to that level. Okay, I'm bearish for the year. That's what I'm saying. I'm bearish for the year. So I'm looking for narrative in price to support my bearish bias for the year. Okay, so and invalidation, my bearish invalidation is if we get close above this level. Okay, so for EU, my expectation is that if at all we get a sweep of this high, maybe we get a sweep of this high and then instant rejection. Just sweep it, instant rejection. Okay, I don't want to see price even come close to this level. Okay, if at all it would, maybe just a week and then instant rejection. That's what I'll be watching and looking out for. So that's why I'm looking to go long. I'm going to check to see if this high is going to be taken first. Then once this high is taken, I'm going to go short. Once this high is taken right there, I'm going to go short, and my stop loss will be above this level. If I'm going to be trading, I'm not trading live on a live phone, maybe paper trading on trading view. Okay, so that's if I'm going to execute it. Okay, but assuming I'm going to trade this, assuming I will trade this normally, once this high is taken, I will go short. I'm going to go short once price trades above this high, or perhaps if I want to be careful, I can look for confirmation on the low time frame, on the lower time frame. Okay, so for now, what I would expect is maybe a sweep of this high for the high of the week. I don't want to see a close above here. I don't even want to see it come close to that level. If at all, just a sweep it and then reject. So something like this, that would be my expectation for the year. Um, Maybe just sweep it like that, drop down, and shift the market structure, something like this. Uh, these levels are very important. They are very important levels that so this level might push price significantly. Okay, but if it fails ahead, then that would tell me that their algo is not in a sell program. Okay, but so this is a level to pay attention to. That's what I'm saying. And this level to this 0.5 level, this 0.5 level, this level, and this level. Those are very important levels to pay attention to. Okay, so we can get significant push from this level or this level. Okay, but I'm bearish for the week. Okay, that's what I'm saying. In essence, we've seen a Judas swing to the upside, right? The market opened and drived up. So that for me is a Judas swing. Okay, so if at all we get a sweep of this high for a Tuesday high of the week or a Wednesday high of the week, either today or tomorrow, sweep this high for Wednesday or Tuesday high of the week and then reject and start to drop down to this level. Okay, and potentially this low. Okay, this low potentially. I'd like to see that low taken. Okay, so that's my expectation for Euro USD. Basically, what I'm saying is I'm bearish. Okay, ideally, I want to see that's taking out this high. This is a yearly high. Okay, let me. This is a this is 2022's high. So 2022 high has been taken. That's significant. That's very, very significant. When a yearly high is taken, that is very, very significant. So the high of the week might be in already. Okay, but preferably I would actually like to see a sweep of this level. Okay, maybe liquidity sweep. That would give me an opportunity to enter to take a turtle soup setup. Okay, if I want to trade this, okay, to give me an opportunity to take a turtle soup setup once this high is taken and then rejection, and I will hold. This will be a partial level for me, another partial level, and final take profit will be this zero, this level. Okay, but once this level is taken, there is a high probability that price is going to retrace back into the range. Okay, so that's that. Something else now for DXY, just pay attention to this high. Okay, that's an important level to watch, and this fair value gap. Okay, I think this fair value gap is well. Let's see what happens today. I don't want to go into the details of some of the things I'm seeing here, but um 0.5 level. Let's see what happens. Okay, so that's that. That's my expectation. So I'm bearish for the week on Euro USD. Um, so but we'll see. I'm going to be providing updates on the Telegram channel. Okay, if I see anything that changes, I'm going to let you guys know on the channel. Okay, and for now this is interesting. Okay, we have an SMT divergence. Okay, on GU we have a lower high. EU made a higher high. Okay, so now I love this. I love this. Okay, so preferably I still want to see this high taken. All right, this Monday's high, I still want to see price drive up to sweep it maybe into this level, this 0.5 levels, sweep it into that level, reject to attack this low. Okay, that is what I would love to see. Okay, and this high here might get a squeeze. Okay, we also have a sell side imbalance, buy side inefficiency here. So we might drive, but if my bearish bias is right, price should not close above this level. We shouldn't get a 1 hour close above this blue line. Okay, if it closes above it, what that would mean is that it is likely going to squeeze up a bit to the upside. Okay, and so I don't want to see a close above this line. Preferably, I want to see a rejection here at the 0.5 level, or just fill out this CB, this sell side imbalance, and then reject from there. Okay, so once it goes above this 0.5 level, I'll start looking for my shorts setup. Okay, if it comes close to this level and I don't see any short setup, I wouldn't mind taking a risky trade. Okay, I wouldn't mind taking a risky trade. My stop loss will just be slightly above this level, slightly. Okay, so I wouldn't expect a close above it. Okay, I wouldn't expect that because this is a weekly candle. Okay, this is a weekly candle, and price has traded down, closing below the weekly candle, and now we are having a retracement to that weekly candle. It shouldn't go back above here. It should not do that. Okay, it should not do that. And in addition to this is um from this low to this high, that is December range. Okay, from this level here to this level, that is December's range, and price has closed below the range that formed in December, ideally you wouldn't want to see price you wouldn't want to see price go back above this level, okay, especially this level. It should not do that. So I'm looking for a short setup around here. Let's go to the 1 hour time frame. Um, let me see what is happening on Euro US on the low time frame. Um, this TR candle right here, if the market drops into it, that could provide a potential long setup to take out these relative equal highs. So at the very least, price should drive to these relative equal highs. And if the market is going to drive to the relative equal highs, that means there is a high probability that we could get a push to this level, this line right there. Okay. And we might get a sweep of this level, this yellow line. Might get a sweep and then rejection. Okay. Might get a sweep, just a sweep and then instant rejection. Let's see, let's see. But currently this is bullish. Okay, look at this range. Okay, the high, the low. See how price came, failed to close below it, and then bounce back up. Okay, so if price is going to come back for these highs, the market should not close below this level. Okay, because this is also a TR candle right there. The market should not close below it. Okay, that's the general principle of the TR candle. Okay, it should close below and close above, price is going to enter into a range expansion. Okay, that means to come back down to take out buy side, take sell side, take buy side, something like that, like a seek and destroy environment. Okay, I will still make detailed video on the TR candle and how to use it for entries and for see that, see how there was no close above it. Okay, see that. See, look at this as well. See how it just wicks down, failed to close below it. Okay. Now, when you have something like this 2 TR candle right there, when you have 2 TR candles where the equilibrium of one is inside the other one. Okay, like here you have the equilibrium of this TR candle is inside of this other candle. What it typically means is that the market is going to enter into range expansion. Okay, so I know based on this now that this high is likely going to be taken and the market is likely going to reach for this level and potentially this level before it rejects. Okay, but I wouldn't say close above it like I explained on the higher time on the 1 hour time frame initially. Okay, so let's see. So once price takes out this high, that would be a nice turtle soup setup, in my opinion. Okay. Um, so similar thing, we have SMT divergence. Okay, GU fails to make a higher high, so that is SMT divergence. The level to watch for an entry, this 0.5 level, and somewhere above the 0.5, like around here. especially the middle of the midline between this blue line and this red line. Anywhere around here should provide a short setup, okay? And the target would be a new low, okay, to take out this low, right? This is a weekly fair value gap. That is also a draw on liquidity. So we're likely to have a big range this week. Like I said initially, this is CPI. So if you get a short around here, so it makes a lot of sense to hold it to this level. This low is likely going to be taken. Okay, this low is more likely going to be taken on GU compared to EU. Okay, God, this is going to be a really nice setup. You can get an opportunity for that shot. It's going to really be nice, really nice setup. Okay, so that's that for this pairs, Euro, USD and Pound USD. Okay, so that's my expectation. I'm bearish. I'm looking to see a drive up to this level. Let me just use my arrow to show you. If you get a run up to this level, I'm going to go short. I'm going to sell turtle soup, and I'm going to be looking. We might get a retracement here, and then I'll be looking for this level and potentially the weekly fair value gap. Okay, that will be the draw on liquidity once we have a confirmed reversal here. And okay, so let me also do uh, this is interesting. See that, see how price respected that 0.5 level. Now this is something I've drawn on my chart since almost 2 weeks ago. Okay, I've had these levels on my chart since 12th of December. Okay, you can see pinpoint, almost perfect. See that, almost perfect. Okay, so my expectation here is that, okay, pay attention to this 0.5 level. We have relatively equal lows here, but, but, hmm, this price action is looking quite interesting. And this is also looking like a potential market maker sell model. Okay. If this is a market maker sell model, then you would, this is initial consolidation, this is like the run to resistance, hit that 0.5 level perfectly, and it's coming back to retest the consolidation range. Ideally, you would want to see a run up to this level for smart money reversal. Okay, in an ideal situation, you would want to see maybe the retracements can continue down to this level, perhaps to this 0.5 level, and then bounce from there to somewhere around here for smart money reversal, then drop down to take out these relatively equal lows. Now, if it doesn't drop down, if it just rallies up from this level, then this level will provide a retracement when it gets in here. The price action on US500 is not looking as clean and as certain as EU and GU. Okay, because this is a really significant retracement. Okay, price has closed below Monday's low, so that's quite significant. And here, this is weekly. We've seen, I think this high is still likely going to be taken. So if we get a push to this is an order block, right? This is an order block right there. Okay, so if we get a push to that level, maybe somewhere close to this level, ideally I would like to say push to take out this high and then smart money reversal somewhere around there to then take out this relatively poor loss. So pretty much the same thing. Now there is SMT divergence. This is making a higher high. This is making a lower low. I mean a higher low rather. This is making a higher low. Let's see, guys. I'm not too certain about this price action. Okay, look at the 0.5 level. See how this level is aligning perfectly with the midline of this fair value gap right there. Okay, so it aligns. Amazing stuff. So we might get a squeeze to the downside to this level before we then see a reversal to take out this. Oh, it has closed above. Guys, I will need to see um how today's price action pans out. I would like to see how it pans out to have something more concrete on US100. Okay, so that will be all from me for this week's price action. I'm always going to provide updates on my Telegram channel. So if you're not on the channel, feel free to join in. It's completely free. All my trade setup, I'm going to be posting it on the channel. Okay, so I will see you guys in the next video.